Go on?
Yeah, we're good.
All right.
We are good.
We're good. Welcome to Get Justice with Scott Elliot Smith.
Michael, good morning. You have a cold.
Barely. You can only tell if you look, see, or you're around me. Other than
Yes.
that, you'd have no idea.
Well, keep your distance. This is the flu season, you
I
know.
would like to sit closer, but it is a radio show. No one will be able to tell.
No, we don't need you to sit closer. Michael, what's the topic of the day?
Today is car insurance rates and it being at an all-time high. And I know we kind of discussed this a little bit on other shows in the past, but the reason I bring this up, this was a recent article that is a national article, that they are up across the country. I know a lot of times we talk about just our certain city or after flood damage, vehicle damage, natural disaster, but this was across the country, and I thought it was a pretty significant thing, as we're always talking about. Insurance companies are not out to lose money, right?
Absolutely not.
So that being the key, I thought it would be important for people to understand why their insurance premiums are going up and actually how to combat it a little bit.
Yeah, the national trend, let's assume your source is correct, that the rates are going up for auto insurance, can be explained a lot of different ways. I'll give you my opinion today. They're not all necessarily fact, but we do know to some degree how insurance rates generally are figured for auto vehicle coverage. First of all, you have to know what to get when you seek auto insurance. And we've talked about this on several occasions, but I want to talk about it every day if I can, because there's not enough people out here that are listening that have sufficient insurance. Maybe have things they don't need and don't have things that they do need. For instance, my big pet peeve with people who have auto insurance is that they don't have underinsurance and uninsurance, which simply means this. You buy auto coverage from your agent, and what you need to do or what you need to ask is, does this include uninsurance and underinsurance? If it doesn't, get it. Get it and have it equal to your liability limits. What is uninsurance? What is underinsurance? Well, uninsurance is if you're in a collision and the person who causes it does not have insurance that covers you regardless. You can control that, so you get it. Underinsurance is if the person who causes the collision and your damages doesn't have enough. You can control that. You can't control how they drive and you can't control what they do, but you can control how much coverage you got in case you are damaged, in case you are injured, in case there's a loss of limb or life. You can control that, at least for your family, if you get the right amount and the right kind of insurance. So, insurance policies, for the most part, Michael, are a la carte. Some restaurant you go to and you might order a hamburger. Well, the hamburger costs you X dollars. Well, you want fries. Well, that's extra. You want a salad. That's extra. That's how insurance policies are. They're not like you buy a burger and you get a side for free and you get a salad that comes with it. So what you normally get, depending on the insurance coverage that you request and the company you're using, is that you'll get some basics. You might get the burger without the lettuce, and you might get the burger without tomato. But you're going to get the burger, and you might get comprehensive and collision. And that's more about damage to your car, as opposed to damage to you or damage to your family members in the car. So one thing you always want to do is have sufficient amount of liability insurance. And that's going to cost different amounts depending on how much your limits are. I tell everybody, don't scrimp on your auto insurance. As much as I don't like them, they're the bane of our existence. They're a necessary evil. You got to have them. I'm their best friend on this show because I'm telling you to buy insurance. They're not going to treat you fairly, but you got to have it, so at least you got something. Don't go without it.
That's a real backhanded compliment.
Oh,
Meet my friend. He's not much of a friend, but he's here.
You got to have it.
Right.
You got to have this bad friend.
Right.
Well, that's insurance because they've controlled everything, and the law says you got to have auto insurance, and it's a good idea to have it. Making a claim on it's a completely different story, but get insurance that covers you and your family. Get as much as you can to cover maybe the worth of your personal assets. So in case you cause a collision, you have liability coverage that in case you're liable, that they won't go after your personal assets, won't get your home, won't get your cars, won't get your stocks and bonds or whatever savings you've got. You want to have enough insurance to cover you. So if you cause a collision, They don't go after your personal assets. Hopefully you don't kill anybody. Hopefully you don't maim anybody. But you have to work off the idea that could happen. The uninsurance, underinsurance is in case they're at fault and they don't have enough insurance or they have no insurance. Have that at least equal to your liability limits. At a minimum, $100,000. I say much more than that. $250,000 in liability coverage, $250,000 in uninsurance and underinsurance is a starting point. You might go, that's too much. Well, that's very expensive. We'll price it out. It's not as expensive as you think.
And if you haven't heard the show before, what we're talking about is the difference of maybe another $6 to $9 a month in a policy. I think people get overwhelmed by that $100,000 mark, $200,000. Thinking, it's kind of like buying a house. Like, well, that's going to cost me another $1,100 a month or whatever it is. It is amortized over the course of the contract. So it's not costing you that much more to add these things.
It's absolutely right. And all you can do is price it. For instance, anybody listening to this show and here's what I've just had to say, hang up, call your agent. Ask them if you've got uninsurance and underinsurance. And if you don't, ask them for it. Ask them to quote you for an amount equal to your liability limits. Do that today. Now, this is probably Sunday or today if you're listening live. You can do that. It doesn't cost you anything. Tell them to price it. Go to an independent insurance agent who will price it over a number of different companies. Now, this all comes back to why are the rates so high in our country? Why are the auto rates now at an all-time high? Well, let me give you my opinion about insurance companies. They don't lose. They don't lose. They're like casinos. I've said this before. But there may be a few people that collect on their claims, and they may be happy, very few. But most people don't, and insurance companies will fight you when it comes to paying out. They love you when you pay in.
Right.
That's why I have these wonderful billion-dollar commercial industries of the companies that say, you're in good hands.
They have nice calendars, too.
They have nice calendars.
They're really nice, good scenic views.
And they hire celebrities, and they say you're in good hands, and they're great neighbors. And none of that, in my experience, is true, because they're loving on you when they want you to pay your premium, but they ain't loving on you when you come to make a claim after you've been in a collision and the at-fault party doesn't want to pay, and your own insurance company treats you like the enemy. That's why I say they're a necessary evil, because they don't treat you fairly. If they treat us all fairly, I'd be out of business. And I invite the insurance industry to treat you fairly.
Yeah, we could just do this show. You wouldn't have to be in court. We could just do this show.
I'd be out of business.
We can talk about wine.
I'd be out of business. We could talk about anything.
Well, I want to go back to what you just said when you said call an agent. You've said this before, to shop around independent agents so you can get a wider array of products, right, that you could look at. Because it's not just price, it's actual product. You don't want to skimp on it, so you got to find the best thing that fits your lifestyle.
Yeah, you don't want to just go to one company. There are captive agents, which means they only sell one type of company insurance. Whether it's a State Farm or a Nationwide or a Safe Auto, they're not. You call them up, they're just going to quote you what they have. You go to an independent insurance agent, they may have 10, 12 different companies that they will shop your insurance to. One company may give you a high rate. One company may give you a low rate. A lot of the coverage is about the same. Give or take a little bit. Shop it. Why not get more coverage at a lesser premium? So why are rates so high right now? Michael, why do you think they're so high?
Well, I think if I'm looking at this, just the economy, if I'm looking at the natural disasters that we had, if it's a home coverage situation, there's flooding, they're going to have to make it up somewhere. Insurance companies do home, life, and auto, right? So if they're paying out in one end of it, they got to make it up somewhere else. So to me, it appears they're putting it into auto. If I increase those rates, yes, we took a beating in Texas and Florida on the hurricanes, on the home side, on life insurance policies. I got to make it up somewhere because I've got corporate shareholders. That's my own opinion.
You become very cynical on this show.
I don't know why. It seems like I've been sitting here with a guy who's kind of opened my eyes to being more cynical.
Well, going back to insurance companies, they're in it for a profit, right? They have so much money that they can write off the millions of dollars to put their name on an arena or a hospital. And everybody thinks, oh, they're just such a wonderful company because their name's on that hospital or
They
their
want to
name's
be
on
part
that
of the
arena.
community. That's why they
Oh
did it.
gosh, aren't they the greatest thing since sliced bread? Well, that's just an accounting PR move. That's all it is. Because they have billions of dollars, the accounting department says to them, you know, if you give this money away to this hospital or this arena,
It's a
we don't pay
write-off.
as much taxes on it.
Right.
And in the end, we're much better off and our profit margins are really higher and our shareholders get a little bit more per share.
Right.
Now, it's not really that simple, but kind of
It
is.
does kind of work out that way.
Kind of can be. Now, let's go over just the factors real quick on actual insurance rates, coverage calculation for your auto. Driving record, gaps in coverage, if you've had coverage and not had coverage. The vehicle that you drive, how expensive is it to insure? Is it a real expensive vehicle? Is it a cheaper model? Where you live, your accident history, the mileage on your car. All those things go into a general auto insurance calculation. I'm not so sure that your credit rating is not included.
Actually, credit was listed in a lot of the reasons why it's been going up.
Yeah. Gender, age, younger drivers involved in more collisions than older drivers. They're going to charge them more. That means your parents are probably going to pay more. When your daughter becomes of driving age, your rates are going to go up. It's just a statistical category they go by. But in terms of the question of why insurance rates are higher now, well, you hit on a subject that I could speculate would be true. Insurance companies don't want to lose money, so if they're losing it on the homeowner side, they may jack it up on the auto side. There may be statistics that the auto collision injuries and deaths have gone up. If that's the case, that would be one reason. In other words, you're paying for bad drivers. Drivers who cause collisions, cause injuries and death, and you're saying, hey, wait a minute, my rates went up. I didn't have an accident. I didn't make a claim. Why mine? Well, you're paying for those guys. You're paying for those guys.
Well, it's kind of like the theory about, I don't know if you've ever heard this theory, when people steal shopping carts. The price of the items in the store go up because they have to replace the shopping carts. I know it seems really elementary, but again,
Well,
if you have a good driving record, but other people out there drinking and driving, doing whatever, or they don't have insurance, it still trickles down to the consumer somewhere.
Let's talk about how that's kind of political in nature. For instance, we've got people on the right that don't want to pay for people that don't have anything, and the people on the left want it to be equally spread out. In other words, people on the right might say, why are we paying for Medicaid and Medicare and all of the things that are beneficial to a society, to people that they may claim aren't working, that should work, or that are getting a handout, that the affluent are paying for the less affluent. That's an argument. Left is going, we need to even it out. People who've got all the money, who've got all of the power, need to pay more. Well, think about it this way. If insurance is that way, and we're paying for the people who are bad drivers, that's more of a, I guess you would want to call a liberal way of interpreting it. That's not really the way the right would see it, but that's how capitalism creates this type of scenario. So those same people on the corporate side, on the right, who may say, we're not paying for the people who have less, are doing this exact opposite thing in the business. So if you and I, who don't have a claim on our car insurance, we have not been in a collision, we didn't cause one, and we're to make an injury claim for someone who injured us under our uninsurance or underinsurance policies, we're paying for those guys. How fair is that, Michael?
Well, listen, I believe in fair play, so I'm fine with it. No, but you know, there are a lot of people out there that I don't know that they realize that their insurance is going up. The funny part of it is we're talking about adding, you know, $6 to $10 to $20 a month per policy. But when you look at it in some of the states, the premium is like on average $1,427. Some have gone up to $6,000.
Yeah.
It's going up anyway. So it kind of goes back to where you said under insurance, uninsurance.
Yeah.
You might as well put the money in it yourself and pick what you like.
Well, protect yourself. Learn about what it is you're being covered for. You might get an umbrella policy on top of that. If you can afford it, umbrella policies, you can get up to $1 million, $2 million, $5 million, $10 million. And they're not that expensive once you meet the threshold of your uninsurance and underinsurance coverage and liability coverage limits. So
But you also have to know to ask for it.
well, you have to know to ask for it. That's why, hopefully, if you're listening, I'm educating you a bit on what at least to ask for. Because if you're counting your pennies, if your budget's important in your household, you need to look at your insurance. If your rates do go up, you need to find out why.
Right.
And call up your agent and ask why. Maybe they don't know. Well, then shop it. Shop it with an independent agent and find out something that's lower. If you're a good driver, you haven't been in collisions, you haven't made claims, your rates shouldn't theoretically go up. But some people go, hey, this is the way it is. Everything goes up. My cost of milk went up. Cost of hamburgers went up. I guess I just have to pay more. Well, you don't necessarily have to pay more. And another thing you need to know is maybe you get better coverage by taking things out of your coverage that they put in there without you even knowing what it is.
Unnecessary fluff that you don't need, but
An
you're
example.
packaged.
An example. A lot of auto policies have what's called medical payments coverage. That means they'll pay up to a certain amount. It's usually $5,000, sometimes $10,000. They'll pay up to that amount of your medical bills if you're involved in a collision, whether it's your fault or not. Do you really need that? They're going to charge you X dollars for it. Do you need it? If you got good health insurance, you probably don't need it.
Well, you don't want it in some cases anyway, because if they put it on your, you've said this before. If you go to the hospital and they use it, they use it, right? So
They may. Well, that's a whole different topic.
No,
But
no. I just want to
yes,
mention that you had said that before.
It could be gone.
So it could be exhausted.
Well, medical providers want every dollar for dollar they can
Right.
get. Instead of taking what the health insurance contracted for, a $100 X-ray, for example, health insurance may pay $20. But if you're in a car collision, you go to the hospital, they're trained to ask you, you got auto insurance?
Right.
Well, that should have nothing to do with your health care provider.
Not when you're laying on a table.
It has nothing to do with them fixing you,
Right.
helping you. It all has to do with how much money the hospital can make. These non-profit hospitals,
They're there to
they're
help.
in to make
Scott,
money.
they're there
Don't
to
don't
help
kid
you.
yourself.
They're there to help you. I'm not gonna listen to this.
Well, they are to help you there, and they are very good medical providers. And bless their soul, the doctors and the nurses. But the hospital administration is trying to make more money. So they'll take your medical payment money dollar for dollar.
So before we go to break, just make sure you have all of your policies with you at all times. We're going to go to break, but when we come back, I want to talk about considering higher deductibles and reducing coverage on vehicles. You're listening to Get Justice with Scott Elliot Smith. Jim, could you sing a theme song while we're at break?
What is? I thought you were supposed to have one ready for us. A jingle, at least.
Can you do 2 or 3 Monkeys tunes, but not the popular ones?
Not the popular ones. Something like from Porpoise.
Well, at least do
Or the
the
Monkees.
theme song.
Yeah.
Or maybe hum the theme song from Wild Wild West or Mission Impossible, something like that.
Could you just do a shot-by-shot recreation of Help?
or
the movie?
maybe, shot-by-shot recreation of Help, the movie.
I'll
with
let
the
you have a
Beatles.
pen if you want to draw some
Or
notes.
maybe Magical Mystery Tour.
Rachel,
Yeah.
Rachel, you know who the Beatles are?
Yes.
She knows
Okay.
who the Beatles are.
They're a bug.
Name
They're a car.
They're a
Name
bug.
2 Beatles or
Paul?
you're fired.
Paul. And
I'd like to thank the Academy that once again I've won.
I'd like to thank my mother and father.
I don't know.
I'd like
Paul
to,
is alive. Who's the other one that's alive?
She
John
can't.
Lennon.
No.
I don't know if he's alive, but
John Lennon died.
he's in there though.
He was
Nicely
assassinated
done.
Nice.
Very well.
December 8th, 1980. John Lennon was
if it takes
assassinated.
3 hours and you're Googling it, that doesn't
I
Ringo.
didn't Google it.
Ringo is alive. George Harrison died of cancer.
All right, let's
There
go
you go.
back.
Okay.
Enough.
So I want to come
You know,
back.
it's like
Okay,
Wikipedia.
Just come back.
Okay. Juan, bring us back.
Okay, I'm not going to do my Ringo Starr impression. This is Ringo. Peace, everybody. Okay.
He did it anyway.
Richard Stockey. Peace.
Not going to do it. Here we go.
Welcome back to Get Justice with Scott Elliot Smith.
Scott, I kind of cut us off. We had to go to break, but there are a couple pieces of this topic. Again, with car insurance hitting an all-time high as of February 15th. That's how recent this information was. So what I would like to talk about is we talked about shopping around and shopping for insurance programs or pieces. So a couple of the other things that are listed here are considering higher deductibles. And I think we kind of touched on that with liability and that, but can you kind of, when you're looking at deductibles, what's your feeling on
let's
that?
talk about deductibles. That's something you can play with on your policy. For instance, collision and comprehensive coverage on your car is, say, you lose control and you hit a tree. Your fault. but you have insurance for that. Or there's damage to your car as it's sitting in the garage in a hailstorm, or there's the garage your roof fell in. Comprehensive collision coverage. They offer deductibles. You can get a low deductible with a higher premium. Get a higher deductible with a lower premium. It's kind of like health insurance a little bit when you shop it. It depends on what your temperature is. You know, how much can you take? In other words, you think to yourself, okay, if that happens and my car is wrecked and they're going to pay for it, how much can I afford on that before it hurts? So is it a $250 deductible or is it a $1,000 deductible? If you can afford a $1,000 deductible, a lot of times when you have these little scratches in a parking lot, somebody throws a shopping cart into you, maybe you get it fixed yourself, you don't make a claim. People are afraid to make claims because insurance companies...
I see that a lot where people don't, well, I don't want to touch my deductible.
Yeah.
And the whole point is you're still paying for, like, at what point are you going to use that?
Well, it is somewhat smart. I mean, if you've got a high deductible and you can stomach a $1,000 deductible, and if there's scratches on your car or you run into something and it's less than $1,000 and you pay for it yourself, that's fine. Don't make the claim. Mm-hmm. People are afraid of insurance companies. They've got you brainwashed to thinking, you know, you make a claim and we're going to cancel you. Because everybody thinks, oh my God, I'm going to get canceled. Our rates are going to be sky high. Not necessarily. But if you're afraid of that, how much can you stomach on a deductible? So you have to make that decision on what kind of car you got. You paid $50,000 for the car. You paid $25,000 for the car. You paid $5,000 for the car. All different levels of whether or not you want a high deductible. If you're driving a car that's not very expensive, get high liability, get high on insurance, collision and comprehensive, get a high deductible. I mean, you may not fix your car. You drive around with a dent in it. You may have a big scratch in it. So what? So what?
Right.
So what? Your car wasn't worth that much. Now you're driving a $100,000 car or $75,000 car. You're probably going to fix it. And if you're driving that kind of car, chances are you're going to afford it. So maybe you do a little higher deductible and you eat that $500 on the scratch. $750. You get past $1,000. If it's past $1,000, you're probably going to get into all kind of damage. You're into $5,000, $10,000 worth of property damage.
It's cool that there are those different levels. Like, again, I don't think people quite understand the different programs that are, I don't want to say programs, I'm trying to think of different options that are out there of what you can actually raise and take down so it fits in your overall budget. Instead of, I think most people in America at least understand insurance to be, I'm going to buy this package off a shelf. And it's not necessarily what you need. It's not tailored to your specific thing. It is, you drive this kind of car, you live in this neighborhood, here's what the rate is.
Right.
Versus really doing your homework and saying umbrella, underinsurance, liability, the things that you definitely need, and then some add-on pieces.
If it matters to you how much you pay in insurance, you owe it to yourself to figure it out. Find a strong, smart, independent agent who's educated, because not all agents are. They just sometimes just sell it and play golf with you.
Right.
Okay? Or they sell it and say, thanks a lot, let's go to lunch. Well, you need to know, and they need to know. They should help you. This is why you need this. This is why you don't need this. This is how much you need for this, and this is how much you need for that. If they can't do it, find another agent.
But don't you think that's part of the shopping around?
Well, that's why you go to an independent agent.
You should almost, you ever see the movie Boiler Room when Ben Affleck is talking about, walk me down this road?
No.
Well, you should see it. But the point of it is he's telling people, like, I'm waiting for you to give me the signals, right? So if you are educated as a consumer and you realize they're not asking me about my kids, when they're going to drive, you know, how old the car is, how many miles, if they're not asking those certain tells, they're not as educated about this, right? You want someone that's fully educated that could say, here's a change in policy that could save you money, right? Not just, here's my check for the quarter or whatever.
That's right.
You know,
You can get better coverage and pay less. You probably even know what it is you got, and you should. But if you go away with nothing else from today's show, is make sure you got enough uninsurance and underinsurance coverage, because that's the part where you get hit by other people and they don't have enough coverage, and then you're stuck if you don't either. And you talk about these rates going up nationwide. there's a lot of claims being paid, or the profit margins aren't high enough, as you would say, in these insurance company boardroom studies and meetings, that the rates have to go up. And they know what the market can bear. So they inch it up, and nobody notices it. It's like the frog in the boiling water. You know that story?
I've heard this before, but go ahead.
If you put a frog in cool water and slowly turn up the heat, it won't jump out. If you take a frog and throw it into boiling water, it'll immediately jump out.
Right.
So it's sort of an analogy in the sense that they raise your rates slowly. The heat comes on and on and on. Well, most people, their wages aren't going up at the same rate, which is a whole different topic, which is why we have a lot of people working full-time or 2 jobs, and they're still at the poverty level because their rates haven't gone up. Their wages haven't gone up, so they can't keep up. When I was going to college a long, long time ago, I could work at a job and pay for my tuition. Kids who work longer and harder than I did in college still can't pay the tuition. They can't do it. So it's kind of like the rates.
Right.
You got to do what you can do.
Well, again, and just to close out on that subject, what we're talking about is the difference of, in some states it's 9% up to 20%, but when you're talking about 20% on, let's say, $500, you don't feel it as much. You start to feel it when you look at, over 1 million people that are being affected by that percentage. So that's what we're talking about, is that as the individual is going up, but as a nation it's going up.
Oh,
and you're not necessarily getting more coverage for it. You're just paying more for it.
Yeah, we need insurance reform in this country. Insurance has got its way on everything, and they control the lobbyists and our Congress and the White House. I mean, they're all the money. The big pharmaceuticals, big insurance. Man, they're controlling everything. So they get their way. And until people have had enough, they're going to continue to get their way.
We were very pro-insurance for like 30 seconds. And I want to commend you on that. As we're closing out the show, Scott was very pro-insurance for 30 seconds. Scott, thank you for that today. You want to leave him with any words of wisdom as we're signing
The
off?
last words of wisdom I always leave on insurance. Make sure you have enough coverage on insurance and under insurance. Make sure it's equal to your liability limits and to get at least $100,000. Don't scrimp on your insurance, no matter what kind of vehicle you're driving: motorcycle, cheap car, expensive car, truck.
Thank you for listening to Get Justice with Scott Elliot Smith.
Peace out.
Would you do a show about...
Peace out.
Would you do a show about what's wrong